Good evening, guys. Today is Friday, September 20th. It's time to review our portfolio, how it's performed this week. Uh, you can see our total positions right on the screen right now. So our ES positions lose little bit, approximately $500 for the week. Right now it's around 2,000 plus, but it was, I believe, 2,500. But it's completely compensated from our oil position, which now in profit about $300. But a week ago it was minus 1,000, so we're still up a little for the week. But let's talk about our AS position. How you remember, we agreed the first months to be in protective mode and build our hedges first before we start aggressively open our income positions. So we did exactly this, execute this strategy. And for this week, our portfolio has slightly negative delta. After market run up approximately 100 points, uh, it's logical that our position went down a little, just $500. But now we are in good shape. I think that we built pretty sufficient hedges now. We will continue to add, especially Vega hedges, to protect against catastrophic event. But Delta hedges is enough right now, and we already started end of this week, second month of our ladder, and start opening more aggressive position with positive delta and with credit, and we will continue to do that. We also opened yesterday our B2 ladder position, which actually we bend a little our rule, because usually we open ladder on Mondays. But again, because our portfolio after run up of the market was slightly negative, I think that it's kind of safe to open that position on Thursday. And now we have a delta approximately zero. Right now it show minus one, so it's virtually zero. I think that our portfolio in good shape. We will continue to add our ladder position. Also, we open new tranche of our violin position. The first one is in good profit, which we opened 30 days ago. So we plan to open each 30 days a new tranche of violin position and adjust previous one. So we did adjust previous VC1 position of violin to increase potential profit and open the new one. So again, let's talk about oil. If you see oil nicely bounce up from approximately $66 area, now it's around 72, and our position get back to profit. We will next week probably adjust this position to increase that our tail line a little bit, to lift it up, to make a little bit more profit in the future. But we will wait till middle probably of the next week. You can see position is in good shape. So that's it for our portfolio. I just would like to answer your questions, which you publish in Discord channel. It's pretty interesting questions. The first one from Peter: Do you have experience in trading your strategies, such as income ladder, delta hedge, in euro-denominated underlyings? If not, do you think this would be possible? Thanks. Uh, well, yes, probably theoretically it's possible to trade this strategies with any underlying, but the main issue here is liquidity, and not just liquidity now. Probably now it's going to be fine, but we know that where we need liquidity when markets start panicking, start declining, and I am not sure that these underlyings will have enough liquidity to adjust or close our position. Even with the most liquid underlyings like ES futures or SPX, sometimes it's not easy uh, to execute when it is a panic on the market. So I I don't think it's a good idea. Better probably to stay with the most liquid underlyings. Uh, Number two question from Tom. How do you recommend scaling up the income ladder, uh, going to double size? If one sell four naked puts when beginning to scale, do you just maintain that 2-to-1 ratio of PDS to naked put? Well, probably the best idea if you would like to scale it up when we open second or third series of our ladder. How you remember, we open two short puts against one PDS. So keep just the same. If you decide to increase, for example, you can buy two PDSs, but this time you probably should sell three naked puts. Or if you buying three PDSs, sell four. This way, I think it's going to be safer to increase your positions and build it up. Uh, this at least this is how I do it if I need to increase. Uh, Next question from Bob: how should a trader with 1 million account manage his account? Allocation, trading strategies, bill. Same question for $2 million account. Uh, well, the first advice, uh, probably better for big account to do it on interactive brokers instead of Tested Trade or Schwab. Why? Because interactive brokers have much more sophisticated and convenient way to analyze market and portfolio itself. Plus, they have very good statements. Uh, Also, if your position is your portfolio is big, probably you will have lots of idle cash, and interactive brokers pay pretty good interest for your cash. Or even better, if you would like to get a little bit more, you can easily buy bills directly through their system. So it's very convenient, and right now you can get up to 5% per year just from your idle cash. The only disadvantage, how you know probably, of interactive broker, it's margin requirements. It's approximately 2 times higher than tested trades. But if your account so big, I don't think it's gonna be an issue, because I doubt that you're gonna use all your account money and margin uh, to trade our strategies. About allocation, well, I don't think that you should put all your money from big account to our short-term ladder strategy, it's not just riskier, but it's too much work. I prefer for big accounts at least half of my money to keep in a little bit longer term trades like our Violin. It's much less adjustments, uh, and profitability approximately the same, or sometimes it can be even higher. Uh, that's how I recommend to use it. Let's say 50 to 70% to longer term strategies like Violin, 30 to 40% in our ladder. You can add some commodities trades like oil or gold. And of course, keep your cash in T-bills, which give you additional profit. Uh, that's how I will treat big accounts. But again, I don't recommend to scale up in full capacity until you fully understand that strategies, and don't forget to build sufficient Vega hedges, because we had all of us had a bad experience just months ago. Uh, we need good protection against this kind of event. Uh, and last question, trade plan. What your target return on investment, and how much capital are you willing to deploy? Monthly income you want percentage wise or dollar wise? Well, our strategy is what I expect from them. An average, probably it's gonna be from 10 to 15% per month per margin used for tested rate, or two times less, let's say from 5 to 7% for interactive brokers. Uh, how much margin you gonna use, it's up to you, but I don't recommend to go much more than 30-35% for tested trade, because we experience that they start increasing margin requirement very fast when market declining. Much better situation with interactive brokers. So with them, you can probably utilize up to 50% of your margin, total margin, for our strategies. So if we're gonna do it this way, it's gonna be approximately, let's say, for tested rate, from 2 to 4, 5% per month, an average. Sometimes it's gonna be better, sometimes it's gonna be less, but this is what I'm expecting from our strategies. Uh, what else? I don't see any other questions so far. So, guys, don't forget to put your questions. It's interesting, and probably all other people would like to hear that answers. I'm glad that what we're doing, and our portfolio behaving pretty well. And oh, by the way, I would like to show you the feature of OptionNet Explorer. Probably you didn't know. For example, if we, like right now, we show trying to see all our trades together. By default, the system OptionNet Explorer will chart it for the closest expiration in our list. If you would like to see it for different expiration, you can change it from auto to specific days. For example, let's see how our position was gonna look like in October 18. You can see it looks much safer than it was before, because it's longer term, and our delta hedges and the vega hedges helping us. If we go even longer term, let's say to November 15, you can see how protective we are, how our delta and vega hedges work for us. And don't forget, we even didn't utilize all our vega hedges which we plan. We're gonna continue for 3 or 4 months adding them to have excessive longs from our vega hedge at least 2-3 times more by quantity than our short puts from our income generating strategies like lateral and violin. So safety first, and all our strategies and all our techniques will be around safety. How much we're gonna make? I hope we're gonna make enough to be happy, but we have to sleep well and make sure that event like happen in August 5th will not put us out of business. So thank you very much. And again, you can, for new people who are watching our video, you can always join us for free in our Discord channel. You can find it in YouTube. And if you like what we're doing, you can also join our premium membership. It's for now, it's just $100, €100 per month, and I think you will be happy. Thank you very much, guys, and have a very good weekend.